Hey, confession time. June was not a well-managed, clean portfolio. The tickers that caused a problem were Broadcom, or AVGO, and IBIT, but the real issue was kind of something else underlying. So it was the same pattern I kept trying to get rid of. Come up with a decent idea, but then put on a bad structure and then just too much size. So the portfolio was mostly SGov in short-term cash for the month of May and the beginning of June. I wanted to commit to a fixed portfolio, but the market was like just pumping on steroids, and I was kind of nervous to like just jump in. So instead of just accepting the current price, I was selling short-dated puts on stocks for earnings because I thought I could maybe like control the situation better and get some quick action going. The results were average, but it kept me trading very actively instead of operating from like a nice, clean, organized structure. So I finally transitioned the portfolio after June 10th. So let's take a look at Broadcom. I had a good read originally. I was actually trading this back in May, and the stock just ran hard right up until the earnings release. So by the time the earnings actually arrived, I had already made some good profits on this ticker, but I kept closing and re-entering the trade, trying to milk as much as I could all the way up until earnings. I did not need to stay in the trade through earnings at this point, but I stayed. And I held through earnings on a higher strike short put. And I sold some shares short to hedge the delta, but I was in belief that the downside move would be manageable and the volatility was appropriately priced, but it was not. This is the actual transaction record for Broadcom for the month of June only that came from the database. The key line is the 435 strike put. That was the problem, and honestly, like when you look at this, you're like, oh, that's stupid. The strike price was very high, and I knew it. I knew it actually at the time I entered it. I thought the hedge was going to be enough. The earnings catalyst, I knew, and I have a small portfolio like relative to like trading an option on this type of on this price. So it is kind of easy to get caught up in large trades. So maybe there's a little bit of forgiveness there. The earlier trades in May and the first 2 days of June that gave me those easy profits, and it kind of got me sucked into doing thinking that it was easy and not properly thinking. So those easy profits often hide like the underlying sizing problem, and kind of like the rule I'm kind of getting from this is if the trade already paid, I need to make up new reason to stay, and if I don't have one, then like why am I wasting time? So after I ended up having to close that trade because I didn't want to hold or get assigned that stock, I tried a quick reset and I flipped the portfolio into IBIT because the market was kind of crashing and it was exciting. I got excited because the portfolio was like now larger than 1 Bitcoin as Bitcoin was crashing. So I thought, hey, that's a good benchmark to beat. Like maybe I'll jump in. But the thesis actually was actually okay. Bitcoin could sit in this new range around 60,000, which is like well below Michael Saylor's and MicroStrategy's cost basis, which is like at this time like 74,000 or something. I could collect theta while in this range, and I could build like synthetic exposure and outperform. And it's an okay idea. I wouldn't say it's the best, but in hindsight, the structure I put on was not good enough, and if I thought enough, I could have easily figured that out before I opened this new trade as I was rebounding off of a loss. The spreads are large when entering a lot of option contracts. There's fees, especially for a lower price contract like IBIT. It wasn't very margin efficient, and the short options I was holding are fully path dependent, which is very stressful when you think about it. And also on top of all that, it's kind of difficult to close the entire trade quickly in an emergency. So that's something to take in mind in terms of like liquidity. So this is the grouped IBIT activity into a simplified table that I pulled from the database. Here's the facts. The stock exposure changed a lot between like June 1st and June 10th. On top of that, there was 3 sets of option contracts with different expiries. One in the same month of June, one in July, and another set for January of 2027. It was just too complex, and I didn't stay in the trades long enough to let them work for me. Instead, I just sized up too large, got stressed once I realized I wasn't willing to ride this out and wait. And I also felt like it wasn't even worth it to reduce size. I just got annoyed, and I needed to like just reset and figure out kind of like, well, why was this just not working for me? So the real reset came on June 10th. That's the first day that closed when the portfolio was kind of matching this whole 40-20-20-20 portfolio of SPY, SGov, Gold, and IBIT. June still had a lot of transition risk in the first 10 days, and I was using old active trading habits to size up and try to make big profits quickly. So when I talk about June performance later, officially, like this matters, the first part of the month was not really the clean portfolio. So after June 10th, I had to get right back to work for the rest of the month to like repair the damage. So SpaceX helped the most, thank God for that. I traded DRAM and just SPY with some lucky timing, just selling and buying lower. Adobe and Micron helped a little bit too, trading around earnings. So the repair mostly worked in the end, but there was a huge cost to this entire process. And a flat month like June should not require this much cleanup. Realized trading was down roughly 0.5%, but the portfolio return I think was kind of slightly positive when you factor in the US Canadian exchange. So as a Canadian, you know, it kind of made this look a lot better, but that was not me doing that work. That was just the currency exchange rate. The portfolio survived, and the trading mostly repaired the self-inflicted damage. So the takeaway from this is kind of comes down to just flexibility. Like as a retail trader, my edge is not size. It is not having access to advanced information and special software. The edge is not needing to do anything, like having full flexibility. I don't have a mandate. I don't have career risk. I don't need to deploy capital on a schedule. I can wait, I can move small, and then I can fully disappear. But with IBIT, I ended up doing the opposite. I locked myself into option structures with margin, spreads, and path dependence. And that structure kind of fought the entire edge of being a retail trader. So how do I update my system? This is mostly, I think it's mostly a behavioral update. I know I didn't calculate things perfectly either. But if a catalyst trade already paid before the catalyst happens, I need a fresh reason to stay in. If not, I should just think about something else, get out and focus on something else. Before adding size, like you saw some of the sizes for like 100%, I need to write down assignment exposure, margin use, exit plan. There's no point in putting on a large option structure with like far dated expiries, or just in general having too many short options all over the place. And if I feel the urge to make it back after a loss, I need to reduce complexity first. I think that would actually help a lot. The fixed portfolio is the default, and each trade that I add on top as a bonus, it needs to earn its place. So in closing, I don't think it's really about the P&L. June was the same old mistake, decent idea, bad structure, too much size. The portfolio survived, so okay, sure, okay, pat yourself on the back, it's fine. But the real question is whether these poor habits will survive, and that is what I need to find out in July. So for the disclosure, this is my own capital, and this is just me documenting my own personal thinking process. Nothing about client results, not investment advice or recommendation. And use of options and margins can like create losses very quickly, as you can see in this presentation. Thanks. Bye.